and it. So I will not be shocked in another couple of years that another CBEX will show up. I didn't even know a lot about it because
Oh, I think that is certain. I think that is certain. CBEX will be back.
I'm just like, how are Nigerians falling for this again? When some years ago, was it 2015, 2016, was MMM
Right?
that was trending then. There have been different variants of these Ponzi schemes, but like you
Right.
said, it's desperation and also a financial illiteracy that just makes people. What was even the story? Like, let's break it up because I was hearing conflicting news or information. Some people say it's $800 million that was
Okay.
ciphered.
The number that I have from EFCC, it is 1.3 trillion naira. 1.3 trillion naira from estimated about 200,000 Nigerians were defrauded by the scheme. So that is a whole lot of money, right?
On social.
It is the typical way they lure people in, low risks. So they put, and this is probably the same for all these Ponzi schemes, right? And this is something that people should watch out for. It's like they
Yeah.
have low barrier of entry. So one of the things that the EFCC chairman mentioned in one of the talks that he gave is that they do not require KYC.
Mm, I
And
see.
exactly. So there's no verification required. So, and that alone should be a red flag for most people, right? So if you're putting your money into, will I say, an investment platform, although they call it crypto trading with algorithms or something, and they say, oh, you don't need any verification, just put your money. And
You know that.
people tend to believe it. I feel like that's a red flag that people should watch out for. Then there's
Yeah.
also the high returns. That one is, customary with these Ponzi schemes. It was the same with MMM. Do you remember Ultimate Cyclers?
My
Ultimate Cyclers, there was Twin Class, there was Binomo, there was is it MBA Forex
yeah,
that
there's
also
MBA for
happened and scammed a lot of people. So there's that promise of huge returns at the end of the day that you're going to make. I think the promise with CBEX, I'm not so certain. I think it was like 50% of your investment every month, or I think the 1% of your money per day.
but I see. Because
So the
for
promise
me,
was ridiculous, or it always is ridiculous.
yeah, so but I think a few years ago I listened to one of my best podcasts in what Planet Money. They had like an episode called The Anatomy of a Scam.
Sorry,
And
what's
it
the name
kind
of the
of
podcast again?
Planet Money.
Oh yeah, Planet Money. All right,
Planet Money, and it kind
of
of
course,
broke
of course.
within every scam, there are certain elements that once you see, you already know without even thinking too much that this is not true.
Right,
One of the things, there's type of urgency. So some of them, there's an urgency for you to get in.
exactly. There's the pressure that they put on people to invest money.
There's that urgency. Then also there's the ridiculous gains or returns. Once you see what I always do in my head is this: the richest men in the world, how much are they making on their investments? Like, and
Right.
that's people that are investing billions of dollars into ETFs. These people are comfortable with 8 to 10%, 13%, maybe
Mm-hmm.
at best 10%. When you start seeing any number that is above that, you know that something is fishy. It's either, and this happens, so it's called alpha, is either there is asymmetry of information. That means what I'm saying is that there's something that your people or the people you are investing in know that the
That
whole
you
world
don't
does.
know.
So,
Right.
and that's very, very, very rare. Because if they do indeed have information that is not available, why would they provide that to you? Why won't they, keep it for themselves and take all the gains from all of this? So those are the things I always think about, and I want like you
Right.
think about. One, there's that urgency. The returns are not realistic. They always claim that they have some edge, and just think about it. Why will they give you this edge? Why not just use it themselves and make all the gain instead of
Right.
they out of the goodness of their heart that they just decided
Yeah.
to
Why?
reward?
Why risk other people finding about your golden goose, or that, or the what they call it? Is it the goose that lay the golden egg or something like that? So like, why risk people knowing your secrets to fortune because you are so nice from the bottom of your heart?
Definitely not. So you know that there is a catch, and when there is a catch, you need to find out what it is. But I know another thing that happens is a lot of people that happened
Mm-hmm.
to me too. Think that getting early, let me
Right.
get it. before this thing busts. And
True, true, true.
early, some of them get greedy after they see the ridiculous return with the first few times and they don't get
Mm-hmm.
out because that's human nature. Once you start getting, you see, there's no drug that more addictive than easy money. So once you start getting those returns, you
Mm-hmm.
going back in. It's like a casino, and you cannot win the house. You can't win the people that are setting this up to take your money.
Yeah. So let me get in early. One thing that I hear often is like, let me get in early, right? So I'll now remove my capital. I took my capital
Yeah,
out.
well,
I took my capital out. So it's just the interest that I've earned on it that I'll be
listen to,
investing.
and what people don't know is that you don't know when the good time will fall, and
You have
you
no
don't.
idea.
So they're just trying to gamble away your money. But
I
yeah, these
mean,
things have been in Nigeria a long, long time. It was
right.
one of the indicators of a developing economy that a lot of these things strive more.
I mean, I feel very sorry for the people that lost their money in the scheme. I mean, it is not easy to lose your hard-earned cash. He called it good lost a substantial amount of money. And what happened is that he heard from his friend that, oh, I've made so amount, and he was like, okay,
If you
let me invest this huge amount, and he also lost that money in the scam. I think another thing to look out for with all these scams is that they are overly focused on growth. Like some of them, they want you to bring people in, right? So once you start getting referrals or getting paid for referrals, that's another thing that you should look out for. When you say,
Yes.
oh, anybody that you bring in, you get 10% of the person's investment.
Uh,
How are you making 10% of just like that as a payout for
yes.
doing just that, bringing a person in? That's something that I would say that people should look at.
There was a time in my life where I was very obsessed about just researching MLMs. So MLMs are not Ponzi schemes, but they
Mm-hmm.
are kind of Ponzi schemes because they have a product.
That is multi-level marketing.
Yeah, so multi-level marketing. So it's the same thing as a Ponzi scheme. They have a product, let's say, for example, a Forever Living product. I think Forever Living are they're the most established MLM type product that still exists
I think
today.
Mary Kay as well. Mary Kay, the cosmetic company,
Yeah,
they are
yeah.
also like an MLM kind of thing.
So there are only a few really established products that are successful through MLM. You find that they try to is the person that is at the top of the pyramid. They're the ones cashing out because you are creating your own empire, and
Mm-hmm.
is your down recruiters who will be funneling money to you up. So it's the incentive is just not aligned to number one sell the product, but the incentive is more to recruit people so that you can get return on those than just even selling the product. But Ponzi schemes in themselves are the worst variants of MLM. And once you see that in the equation, just
Right.
yeah. I remember there was a forex one now that year.
Yeah,
What
it was MBA Forex. I can
was
remember.
the forex that was using
Damn, I've forgotten
what?
the name, but I know the one that you are talking about. I know it. So they had this elaborate scheme with courses where they teach
Yeah,
you how to trade. Then you pay, I don't know, 300 and something. I can't remember the amount it was
on
a
then you
month.
keep the
Damn.
rank. Yeah,
Can you imagine how much money those people made? Like
they
that's
cashed
that
out.
is that is subscription like
Yes,
on
now
forex trading.
does HBO Max charge for subscription plan?
That was ridiculous. Actually, that's
So
ridiculous. So I mean, those are some things to watch out for. But like, by the way, what do you think is the way forward? Like out of, I mean, for me, off the top of my head, I would say like, don't be greedy. Once you see those returns, there are some things that should just be instant red flags to you. So once you see an investment, quote unquote, investment opportunity where you start making 40%. I mean, they will say 40% in so amount of months. I mean, you should raise an eyebrow.
yeah,
I mean, just cut your coat according to your size. Do not be greedy. Yeah, that would be like number one way forward for me. Like, what do you
but
think?
the thing is that you can't call men's greed. Like if you call men, you might as well call innovation because most times it's people's desires, to make it big that then
Hmm.
get them to think of different ways to solve problems that will, bring money to their pockets.
Yeah,
But
there's
not
that.
and it's even getting to the point where, especially for investment, if your plan is to invest your way into financial freedom, which I don't think is possible. If you want to, if that's a part for you, you need to understand what good enough returns, like what the average returns are,
Mm-hmm.
and ensure you stay around investments that are in that range. Because anything that is outside of that, you are most definitely assured that you will lose your capital. And like I was listening to Warren Buffett just they did his last annual shareholders meeting.
Meeting.
Was my like he's an OG, the influencer of influencers. Like I really
The
respect
the investor
him.
influencer number one.
Exactly. If you see the line, I was watching the line at the annual shareholders meeting to get to speak to him was like 30 minutes long. Like
Wow.
people come from far and wide, CEOs of 45 companies just to sit
Right.
down. So his rule that the first rule is that you don't lose your capital. And what was the second rule?
Go back to rule number one. What to
That's
live by.
so once that's your goal, you just have to, keep your expectations at that average. But of
Right.
course, there are one-off events, but those one-off events are not what make the most of people's returns. If you check on average, so you have to be very, very careful into those types of very volatile investments.
Right.
This
So
investments.
I'm also thinking, like you said something about investing your way into financial freedom. Like how much of getting ahead in the world is actually risk taking, you know? I mean, people
Mm,
might look at it as, omo, na risk. Oh. Make I just risk I get this key somewhere, so let me risk it with this CBEX thing
mhm,
and see what happens. And they might have been fortunate, probably made their money months before the whole thing collapsed. But
yeah,
there is also that aspect of life that has to be risk taking, or that is risk taking in getting ahead. I think I say that there's cautious risk taking where
mm,
try not to be greedy and,
yeah,
make sure that the risk that you're taking, even if it's high risk, it is also calculated. So it is not just heedless and you don't fall into traps of people that are just trying to get money off you.
yeah, yeah.
Another thing that people are pointing their hands to, because when things like this fail, we as a people, it is one of the times that we remember our government, that we have government, right? So people have been pointing their hands at EFCC, talking to the SEC about regulating or stricter regulation for the financial sector. Well, definitely this CBEX was mostly online. It didn't require any KYC. It was definitely not an approved investment to the best of my knowledge. So I've
Yeah,
seen one other thing for people to watch out for. Make sure that whatever you're investing in has that stamp of approval from, if you're investing in Nigeria, that SEC stamp of approval is very important. Make sure that whatever you're investing in is an approved investment and you are just not funneling money to people that just want to, you know, win off you.
and another rule of thumb is when people like it's like I have a lot of quotes from Buffett. When the markets or people are excited about something, you should be cautious. And when they are cautious, that's when you can't get excited.
Mm.
Because what happens is the crowd is a head, and everyone just swings for what is most popular and what is most trendy. So a rule
Right?
of thumb, when you see that a lot of people are into something, is like your own internal, you should have like an internal monologue for you to just pause.
Right. Take a breather.
Yes, before taking, any decisions with respect to it. Because what happens, a lot of people that invested is they heard a friend that invested, they saw a video on TikTok, they saw somebody on Facebook, and without thinking, they just put all of their money into this thing and it
Mm-hmm.
got wiped. So a lot of risk is like you were making a point about risk, that to what extent is risk the indicator of success, or can
Right.
you invest your way into or take high risk bets into